Bank of America has launched a new housing program that is likely to lead us to another 2008 style housing crash. In this video, we are going to talk about that program and what Bank of America is doing for a bait and switch that's going to catch people off guard. Hey, this is Attorney Drew Page. Welcome to the Drew Page channel. If you find this video helpful, please subscribe to the channel, like the video, hit the notification bell. Thank you so much to those who have subscribed and for those who are commenting and liking and sharing the content. My goal is to hopefully get to 10,000 subscribers by the end of the year, so please share this content if you will, and let's see how many people we can help with this content. I don't do a whole lot in the way of joking and movies and all that kind of stuff. I'm a real trial lawyer. I don't just do goofy content just to get follows and likes and stuff. I really want to help people and help grow a business here. So please, again, if you will, subscribe to the channel and like the video and all that good stuff. So let's jump right in. Yesterday, news broke that Bank of America is launching a zero down payment home program. And the way that they're selling it is that they're trying to help minorities to be able to buy their first home. And who doesn't want to be in favor of that? I mean, people who would not be in favor of that, are going to be accused of being a racist. And it would be a good thing for minorities to be able to get more homes, easily affordable homes, and be able to, get into home ownership, because that is a step in the direction of wealth. But there are some problems with this program. So let's look at the article that CNBC has put out. The program is called the Community Affordable Loan Solution. The program says that it's going to be available in certain cities that are going to impact the majority of Black and Hispanic Latino neighborhoods, such as Charlotte, North Carolina, Dallas, Detroit, Los Angeles, and Miami. Now, they claim that it's going to be subject to rigorous underwriting, things like, a rent history, utility payments, phone, auto insurance payments, and things of that nature. But they also say that there's absolutely no credit score minimum. So it doesn't matter even if they have a low credit score, they may still be able to qualify for the loan. They have to take a course through the Department of Housing and Urban Development that's approved by Bank of America. And once they complete that, they are able to qualify for a loan of this type. And on appearances, it looks great. It's being sold really well. It's being sold as something helpful to minorities. It's being sold as something that will help people be able to get into home ownership for the first time. And it sounds great. But the truth is, this is a 2008 housing crash style bait and switch. So let's go to the whiteboard and I'll show you exactly what I'm talking about. Now, anyone who has seen the movie The Big Short remembers the ninja loan. No income, no job, no problem. Essentially, if you just wanted a house, all you had to do was sign on the dotted line, sign on the piece of paper, and you were able to get a home. And that's what led in part to the financial crisis, was these people who were getting loans who really couldn't afford them, who couldn't qualify for them with more rigorous standards. And as a result, all of these loans became bad. People began to sell portions of these loans in CDOs. And by doing that, it caused a financial collapse in 2008. So what's different about this program? What is any different about this Bank of America housing program than what was going on in 2005, 2006, 2007? So let's look at the bait of what they're trying to do with this program, and then we'll talk about the switch. So let's look at the bait here. So the first aspect of the bait is they're selling this as a program for minorities, that it's going to be a program that will help Black and Latino neighborhoods be able to get into home ownership. They've been excluded from the majority of home ownership. They mentioned in the article that is predominantly a white housing market, and there's nothing wrong with promoting housing among minorities. It's something that should be done, but it should be done in the right way, not through salesmanship. If you look at the rest of the CNBC article, it actually states anyone can apply for this program. It's not limited to Blacks, Latinos, and other minorities. It explicitly is open to anyone. So that the bait is that this is a program that's going to help minorities, but the switch is that anyone can apply for this. So it doesn't matter if they're white. It doesn't matter what race they are, gender, or any of those things. Anyone can apply. So as long as they take that little class, they've got some record of payment on rent and other things, they are able to qualify for these loan programs. So it's a bait and switch. It's not what they're selling it to be. It is not just for minorities. It is for anyone. So let's look at the second aspect of this bait and switch. No down payment. Sounds great, right? You don't have to have any money up front. That's a good thing. I mean, because you're able to just sign on the dotted line, get a home. You don't have to worry about getting a chunk of money, 20%, 10%, whatever is down. And they say that you have no closing costs. There's no private mortgage insurance. So that all sounds really good. No down payment. That's fantastic. But who does that benefit? Who does it benefit when there's no down payment? It benefits the bank, because now they're able to finance a higher amount in the highest interest rate market that we've had in some time. The national average as of yesterday was 6.5% is what the mortgage rate is now. And with the Fed continually increasing rates and indicating that rates are going to go up and up, who is it going to benefit when there's no down payment? It's going to benefit the banks, because they're going to have more interest to finance at the highest rates that they've been in quite some time. And so the more that they can get in the interest column, the better it is for the bank, and the worse it is for the homeowner. And that's exactly what happened with the financial crisis. People were getting into these ARM loans and these adjustable rates and all these other things, and they weren't able to pay their mortgages because they lost their job during the recession. The increase in the mortgage rates began to get higher, and unless they're indicating that these are going to be fixed rate loans, they could find themselves in an armed situation just like we had in 2007, and it could cause another 2008 style housing crash. So the bait is the no down payment. The switch is the bank gets higher financing. What's the third bait? The third bait is there's no credit minimum. We don't have to worry about it. Anybody can qualify. It doesn't matter what your credit score is. You just show us some payments on mortgage. You show us some utilities, some auto insurance payment. I don't know why insurance. What difference does that make for auto insurance? What about your auto payment? Okay, but whatever. They're saying auto insurance payment. But you could have a low credit score. It doesn't make any difference, and you could qualify. So that sounds great. That's really fantastic, right? But that means that there's not going to be a set interest rate. They don't say that as part of this program it's a fixed rate of 4%, a fixed rate of 5%. It doesn't say any of that. It just says, hey, sign up for this program, wink, wink, nod, nod, and you're going to be able to get home. Don't worry about it, no credit, no problem. And then they're going to jack you up with these interest rates. Watch what happens. It's going to happen. So what's the last bait and switch? When you have lower upfront costs, you're going to get higher home prices. When it's more accessible, where people don't have to worry about a down payment, they don't have to worry about anything, coming down. So let's say that, you have a house on the market that's $300,000, and ordinarily you'd have to put 10% down on a conventional loan. So you got to come up with 30 grand. And now you can't afford that because you don't have 30 grand to put down. Well, it's no big deal. Why don't we get a $500,000 house? Or maybe you're the one selling that $300,000 house and you know about this program, and now you want to sell it for $400,000 because you can sell it to somebody that doesn't have to worry about a down payment. So it's going to benefit the banks, it's going to benefit the sellers, and then the buyers are going to get stuck with these higher priced houses. So you got to make sure that you read between the lines of these programs. And Bank of America is the first to announce this, but what's Wells Fargo going to do? What are these other banks going to do? What are they going to do about offering these types of loans? And if we start to see that these things are getting some momentum, watch out. 2008 is right around the corner again. So I hope you found this video helpful. Please subscribe to the channel, like the video, hit the notification bell, and until next time, stay tuned.